Enphase just reported their quarterly earnings, and despite reporting a triple miss, not a triple beat, a triple miss, missed on revenue estimates, missed on EPS estimates, and missed on guidance expectations as well. Despite all of that, the stock is currently up 10% after hours. It was even up closer to 13% just a couple of minutes ago. Now, of course, overall, if you look at the current valuation compared to its 5-year mean, forward PE, EV to EBITDA, even price to sales, we are lower than before. But there is a good reason for that. Growth is decelerating, revenue is down, profits are down as well, but most importantly, margins. Margins are not that much down. Actually, margins are even up a little bit. There's also a benefit from the IRA credit, but more on that a bit later on. But all in all, how come the stock is up 10-11% after hours after reporting a triple miss? Is the market forward-looking or is the market backwards-looking? I think we all know the answer. The markets are forward-looking, and so since this is a company that is heavily linked with interest rates, when interest rates are low, business is much better than when interest rates are higher. And so probably the markets are saying, you know what, the bar is already extremely low, and by the way, the bar was already low before, and even with that, they missed. But the markets are saying, look, we are expecting rate cuts, and with the rate cuts, we are expecting a reacceleration. And since the business has shown that it is pretty solid despite the current macroeconomic environment, we think we have reached a bottom, and so the stock is up. Of course, when the market opens, a lot of things can change, can go up even more, or can be in the red, as we've seen in the past with a couple of other companies. Now, let's have a look at what the analysts are expecting for the coming fiscal years. So for fiscal year 2024, analysts are expecting sales to decrease close to 20% year over year and EPS to decrease close to 9% year over year, with an acceleration in growth for fiscal year 2025. Sales growth of 35.42% and EPS growing 44.49% year over year. So definitely right now, analysts are expecting fiscal year 2024 to be a down year. But as interest rates go down, they do expect quite a sharp recovery a year after that. Now, before jumping into the numbers, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So during the quarter, they shipped 1,595,677 microinverters, or approximately 660.1 megawatts DC and 80.7 megawatt hours of IQ batteries. Now, for the fourth quarters, these were the results. Revenue came in at $302.6 million. By the way, the bar was already set quite low and they still missed that, so you should be worried a little bit. GAAP gross margins of 48.5%, non-GAAP of 50.3%, that's with net IRA benefits. And as you can see right here, we're looking at GAAP gross margin, Q4 2022, Q3 2023, and Q4 2023. As you can see, margins, gross margins have continued to go up. Maybe that's why the market is viewing this as a big positive. If you look at operating expenses, that has increased a bit quarter over quarter, year over year also, but quite small. As for operating income, we're now at loss here of $10.2 million. Net income was $20.9 million, also a sharp decrease quarter over quarter, year over year, and the same with EPS. Now, with regards to free cash flow, that was $15.4 million in this quarter, and in cash, cash equivalents, and marketable securities of $1.70 billion. Now, for the full year, on a GAAP basis, revenue is down, but not by much, but that's because the second half of the year was heavily impacted. You're probably going to see mid-2024, the last 12 months results wouldn't be the greatest ones, but gross margin, full year 2022, 41.8%, and in 2023, 46.2%. Operating expenses increased year over year. Operating income was down flat-ish. Net income was up, basic EPS up as well. Now they say here with regards to revenue, our revenue in Europe decreased approximately 70% compared to the third quarter of 2023, and the one in the United States decreased approximately 35%. The declines were primarily the results of reduced shipments to manage high inventory at our distribution partner, along with a further softening in demand. Then with regards to capital expenditure requirements, that decreased due to a reduction in their US manufacturing spending. Makes sense. If demand is down, you want to spend less as well, cut costs, manage costs better, layoffs, all of that definitely helped the bottom line a little bit. Then with regards to buybacks, much better timing this time. So in the fourth quarter, they repurchased 1.18 million shares of common stock at the average price of $84.51 per share, very, very close to the bottom, for approximately $100 million. Remember, back in July, they authorized a program worth purchasing up to $1 billion worth of their own shares. Then, with regards to first quarter outlook, they expect revenue to be between $260 and $300 million. So that represents basically being flat quarter over quarter or even down. The market was expecting a bit more than that. GAAP gross margin to be within the range of 42 to 45%. Non-GAAP to be between the range 44 and 47%. As for operating expenses, to be in the range of $144 to $148 million. Now, one extra thing here, and that's obviously stock-based compensation. Fortunately, that number did increase yet again, went from $43.81 million to now $55.22 million, and them repurchasing around $100 million worth of their shares. They're tackling dilution that way. Now, last couple of things here. A quick recap of the Enphase ecosystem. So this is basically Enphase energy system. You've got IQ microinverters, you've got the Enphase cloud, the IQ combiner, main load center, IQ load controller, IQ EV charger, bidirectional or non-bidirectional, depending on what you're buying, IQ battery, system controller, heat pump, utility meter. I mean, you're buying here a whole ecosystem if you want. That's what they're offering. And that's a big deal because that has increased their share of wallet per home. Back in 2019, what did they have to offer? Well, the IQ7 back then from the family of microinverters. So that was around $2,000. Then 2021, the IQ7 family of microinverters went up to $2,300. Plus they added the IQ battery for around $6.2 to $7,200. And so Enphase potential per home increased from $2,000 to $9,000. Moving over to 2022 and onwards, IQ8, IQ battery, and then all the rest here, load controller, EV charger, fuel cell, grid services software, etc., etc. The potential now has increased another $3,000 to reach $12,000 per home. Of course, this is if that home buys all of this. But it's in a much better place right now than it was before. It is also launching in many, many other countries around the globe. And so right now, what do we get? Well, to be honest, before the earnings report, the stock was a bit in no man's land at around $100. Of course, round numbers, as we've spoken about in the past, somehow round numbers do tend to be either a support or a resistance line. Right now, it does seem like this green candle right here looks like a type of quote-unquote a bottom one, because currently we are now back above the 50 and the 20-day moving average. RSI would be pretty neutral. The 200-day moving average is still a long way above us at $136. It would be nice to stay above the 20 and the 50-day moving average. Again, it all depends on what happens when the market opens. Because right now, yes, we're up 10%. We might be up even more tomorrow, like we've seen with Palantir, or we might go crashing down, as we've seen with other companies as well. All the gains disappear when the market opens. But overall, I do sense that the markets are now willing to look past a bad quarter, past a bad guidance for companies like Enphase, because Enphase is a company that would definitely have a lot of tailwinds the moment interest rates come down. So if you're buying this for the long term, then yes, you should be looking past 1 weak quarter or another weak quarter and a weak guidance. And I do think that that's what the markets are signaling right now. can be completely wrong, but that's just my opinion. Do share yours down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.